The thing I'm a little worried about is now we're just kind of going into we've already entered the time period, in my personal opinion, but it seems like we're going even more to a time where you're not going to see much innovation. And I think we've already entered that time, to be honest, over the last several years, but I think it's just becoming even more clear as the years tick on, where we're not going to see huge innovation in the smartphone space. And that's not a good thing for companies like Cirrus Logic and Skyworks Solutions that really count on innovative products, new innovative chips, those smartphone companies wanting to spend, because usually whenever those chips are, the newest, freshest, best chips ever, right? Whatever it is, the smartphone companies pay up for that, right? But if you're going into more of a commoditized cycle here, there could be a lot of margin pressure over the coming years and just not a lot of exciting revenue growth opportunities over the coming years. Howdy there, folks. Happy Monday. Hope everybody's doing great as always out there. Put to call ratio's flying up. So which means a lot of people are buying put options here today versus call options. If this number is ever over 1, basically the way to think about it, this number is ever over 1, you're in a very usually scared bearish market. It means people are loading up on put options. Now, if we look, right, if we go back to right about here, this was when SVB went down and you started having all the fears around regional banks go down. And so you shot all the way up to 1.32 on a put to call ratio. That's a crazy high number there, which means, people were loading up on puts. It could be seen as a contrarian indicator if put to call ratio ever goes over 1, that usually you should be actually buying stocks, because that just means a lot of people are already very, very bearish. If we look August 15th, we were over a 1, and then here recently we were over 1 again. September 5th, we were over a 1 on the put to call ratio. So yeah, it just usually means people are very bearish. But you see a huge spike up today, which means all of a sudden people are like, wanting to load up on puts. They're scared about the market again, things like that, right? So we have Elf on a Shelf is having definitely a good day here today. The baby's up about 6% plus. Wind Resorts having a decent day. They do report earnings this week. Okay, we have a bunch of earnings coming after the bell here today, and a bunch of earnings this week. It's another busy week with earnings. I'll show you the earnings calendar here in just a moment. Metastock having a decent day, so that's good news for the public account. JP Morgan, small position for me. That's a green one here today. Amazon's a pretty good sized position. They're green today. Cheesecake Factory's green. Planets, call it around break even. Qualcomm's around break even. SDAL's around break even here today. Fubo's around break even. Fubo's holding that $3 number pretty strong. Fubo got all the way up to about 308 today. Texas Roadhouse and Pfizer aren't doing much. Tesla Maesla down slightly. Walgreens down slightly. Mattel down slightly. Target down slightly. Corsair down slightly. Skyworks down about 2%. Shopify down about 2%. Nordstrom down 2.5%. PayPal down about 2.6%. Avant Brands 2.77%. Palantir, grab me a beer, down about 3% here today. Honest down about 3%. And Foot Locker down 4% here today. Now, in regards to PayPal, one of the reasons I'm not bullish on PayPal into year end is I was considering maybe there's going to be some folks that still have to tax loss harvest into year end, right? In regards to PayPal specifically, and obviously any of these stocks that have been slaughtered this year, been hit hard, which PayPal is just one of many stocks that's been hit very hard this year. And so that was something I was considering, something I was thinking about that's kind of bearish for PayPal's short-term stock price, and basically meaning PayPal's stock price into year-end. Now, if we get a Santa Claus rally, that will likely push up PayPal regardless. So that is something to think about and consider there, right? Even if there's tax loss harvesting, but maybe it's possible PayPal could underperform the Qs into year-end, because even if it has upward momentum, maybe there's a lot of people that might still tax loss harvest in November, December, right? Which today is November 6th. So we still have nonetheless, folks, we have very limited amount of trading days left in the year. We can call it between 30 and 40 trading days left in the year, right? So if people if they're going to tax loss harvest, they got limited time to kind of basically do it. You got to do it ASAP for those people that are looking to do that, right? And what I just spoke about there in regards to PayPal, it's not just something that affects PayPal. It's going to affect some small cap stocks. It's also going to affect a lot of dividend stocks as well. So it is some things to kind of keep in mind there. Etsy's down about 3.5% here today. Rivian reports earnings this week. That's going to be a huge mover likely, either up or down. Rivian, so looking forward to when their earnings come out. That should be very, very intriguing for Rivian. Polaris is down here today. That's good for me. Toll Brothers down today. That's good for me. Tesla's down. You can say it's good and bad because I have a huge long position on Tesla, right? SDAO's not really doing much. I do need this Dow to sink. I'll be honest with you guys. I do need the Dow to sink in the to the remainder of the year. And the reason being essentially is I have SDAO puts that I would love to be able to cash out with some sweet gains. So my hope is, if I had to pick one way, to be honest with you guys, I hope the Dow goes down into year end. That would be phenomenal for me. If we could see like a 5 to 7% pullback into year end for Dow, which is always a possibility because there are a lot of Dow stocks that have sucked this year, to be honest, and probably going to see tax loss harvesting coming. So if there was any sort of situation like that, that would be beautiful, beautiful. Chipotle's up today, Apple's up today, not good for me in regards to hedges there. Berkshire Hathaway earnings came out, and when people see that Buffett hasn't sold any Apple, maybe people get very bullish about that. Like, there could always be a worry, like, what if Buffett starts selling Apple at some point in time? And when you had their earnings come out, it doesn't seem like there's anything there. Maybe it makes people feel a little better. Maybe it makes the algos feel a little better. My Kathy Wood watch list here today. Unity is her worst stock, it looks like. Down 7+%, which, by the way, I might need to update this because I don't even know if this is our top 10 now at PP, by the way. I just threw that one in with the Kathy Wood list. But I'll have to update that at some point because I haven't updated that in a while. If you don't know Cruisy Doozy is a stock I've owned on and off for probably almost 10 years now at this point in time. And I don't have a position in it right now. Great company. They make a lot of audio-related chips that go into iPhones. They also make like amplifiers that can give you like tactile feedback. So if you ever wondered, like, if you have an iPhone and it makes like a vibration, a lot of times that's actually coming through nowadays. It's not like it used to be back in the day, it used to be an actual like mechanism in there that like spun around. It's not like that nowadays. It's actually an amplifier that's giving that sound through. So anyway, Cirrus Logic, really successful company. If we take a peek at these numbers deeper, obviously on a sequential basis, their numbers are always going to look great because Apple orders so many chips in the September quarter and then in the December quarter, obviously, because that's their big iPhone ramp time. But if we look here, numbers are down for Cruisy Doozy on the audio side. High Performance Mixed is down as well. And net sales overall down almost $60 million. I don't think that bodes well for iPhone numbers, guys. I'm just going to be completely honest with you. All this early talk about iPhone this, iPhone that, it's going to be selling so good. I'm just not seeing it in the numbers, to be quite honest. Gross profit for the company fell to $246 million versus $271 million. Still a very, very healthy number, obviously, right? Gross margin actually picked up for Cirrus Logic year over year despite the drop in revenue. So that's impressive. Their cost of sales, they really kept that in check, right? R&D for the company did drop year over year, which they got to do that. I mean, if your revenue's dropping, you've got to drop R&D, right? Selling general and administrative dropped as well. Income from operations, yeah, I mean, a very impressive number net income wise, about $75 million in net income. That's versus $87 million in the same quarter last year. But I don't know, the thing that worries me a little bit with Cirrus Logic and even Skyworks Solutions a little bit, which Skyworks Solutions is a stock I own. I mean, the thing that worries me about these companies, guys, is it was a great time in the smartphone industry from basically the time the smartphone launched in 2007 all the way up until, around Rona, right? It was a time of incredible innovation in the space. The semiconductors companies were always coming out with just new, exciting chips. Obviously the smartphone space was very competitive from a market share perspective. So, Samsung and Apple and all these companies really had to compete hard against each other. And we saw incredible innovation during that time, right? But the thing I'm a little worried about is now we're just kind of going into we've already entered the time period, in my personal opinion, but it seems like we're going even more to a time where you're not going to see much innovation. And I think we've already entered that time, to be honest, over the last several years, but I think it's just becoming even more clear as the years tick on, where we're not going to see huge innovation in the smartphone space. And that's not a good thing for companies like Cirrus Logic and Skyworks Solutions that really count on innovative products, new innovative chips, those smartphone companies wanting to spend, because usually whenever those chips are, the newest, freshest, best chips ever, right? Whatever it is, the smartphone companies pay up for that, right? But if you're going into more of a commoditized cycle here, there could be a lot of margin pressure over the coming years and just not a lot of exciting revenue growth opportunities over the coming years. And so that's something I'm very concerned about when it comes to companies like Cirrus Logic, companies like Skyworks Solutions and others, is that we're going to go into a little bit of a dark period. And those companies get so much revenue from the smartphone category specifically. And I don't think you're getting the innovation there anymore. It seems like the innovation, like the whole mobile innovation cycle is, I don't want to say played out. It's not really the right term, but it's kind of like it happened. It was here, right? The mobile cycle for the past 15 years is incredible, but now it just seems like we're kind of reaching a stage of like plateauing. The mobile cycle of mobile devices and things like that, right? And it seems like the real innovation you're getting in the world now is really around AI, certainly, right? AI-related chips, and really around like EVs and what obviously Tesla's up to with a lot of self-driving vehicles and stuff like that. And it just seems like that's where the real innovation is right now. And it seems like the real innovation is just not really in mobile as much now at this point in time. Although I will say I think Apple's made some great progress on the Apple Watch. That's been the one product I've been very impressed with. There's like next levels up in terms of innovation there, right? So anyways, that's just kind of my thoughts in regards to that there. I think that could be true for definitely a lot of companies in general, right? That get to those monopoly type, positions, in kind of the cultures and how it changes over time, right? And so anyways, I just thought that was a really good, clip and just, business genius there by obviously Steve Jobs. And Steve Jobs set Apple up for a really good time, obviously, but I feel like slowly over time, as you get such monopoly type power and as you get customers to just, continue to buy whatever product you come out with, the innovation starts to slowly die over time because you start to realize, we don't really need to work that hard. We don't really need to innovate like that. We don't need to have the product people around that maybe we think we do, because no matter what, people are just going to buy it. So, and I think the same could be said with musicians. I think that happens with over time. You look at, a lot of people that blow up big as a musician, and then people are like, man, as they get more and more popular as years tick on, they seem to put out worse music. And it's like, how is this person like putting out such better music 10 years ago? But a lot of times, they almost have monopoly type power. They know everybody's going to listen to it anyways. So, some of that creativity maybe goes away. You're not as hungry. And so it happens with athletes. It happens with everything across the board. So anyway, just thought that was something impactful. But anyways, long story short, that's why I'm a little worried about a lot of these semiconductor companies maybe entering a little bit of a time period of a little bit of a dark age time period. And those semiconductor companies went through a time period of a lot of the dark ages for a bit there. The companies like the Cirrus Logics were in a dark period for a long time. Like Cirrus Logic in the great financial crisis was a $5 stock. And then mobile came around, the smartphone age came around, and it changed everything. And those semiconductor companies grew into semiconductor giants with great innovation and great teams. But I do worry that maybe that innovation cycle is kind of a little dying, and those companies are going to maybe enter a little bit of a dark ages. So, mixed bag. That's a mixed bag day, right? You know what this is, guys? You know what this is? This is the playbook of 2023. It cracks me up, man. Every time the market gets worried, it goes back to the same freaking playbook it's played with all year. And what's that playbook? Divs and smalls weak, money floats to the biggest big techs. And that's it. The biggest stocks do well, everything else flounders. It's the playbook that it's been all year. I think it's going to be a different playbook next year, but that has been the playbook of the entire year. But anyways, alrighty, we got earnings bonanza coming in now. So, and in terms of, it was a mixed bag day. That's the best way I can put it. A lot of the big stocks did okay. Made the indexes look better than it is. It's the same playbook as the entire year has been. But when you go beneath the surface, it was, the public count was down $352 today. So it wasn't like it was a great day out there, right? But all right, let's get ready for these earnings incoming. So this stock is not really doing much after hours. It's up like 3%. But yeah, I feel like that's not that big of a move considering everything I announced. So the $50 million share repurchase is a pretty significant thing because it's not like HIMS is some massive market cap company. HIMS is a very small market cap. $1.3 billion roughly market cap. So $50 million buyback is pretty significant for a company that size. Let's go ahead and take a peek deeper here at these numbers. So yeah, I just want to see the numbers overall here. So subscribers were up 56% for HIMS. Monthly online revenue per average subscriber was down 4%. So that could be seen as a negative. That could definitely be seen as a negative there. Net orders up 33% for the company. AOV was, so average order volume up 19%. Okay. Online revenue 57% up. Wholesale revenue up 39%. Total revenue up 57% for the company. Guide for the fourth quarter, 243 to 248. What were analysts expecting for this upcoming quarter? Let's see. Am I on HIMS? Yep, on HIMS. Let's see. Analysts were at 227 for this upcoming quarter. So 227 is what analysts were at. And the company's guiding for 243, 248. So that's a great beat. That's a great beat. That's midpoint of what? 245.50 there? That's impressive. Adjusted EBITDA 14 to 17 million, reflecting an adjusted EBITDA margin of 6 to 7%. Full year 2023, 868 to 873. So we can call it 871-ish, or 870.5 for the midpoint. So that's above what analysts were expecting there. So that's all really good news. Cash and cash equivalents, $57 million for the company. Short-term investments, $154 million. So both those numbers are up significantly versus where they started the year. So that's good news. Inventory roughly in line. So it looks like HIMS is keeping their inventory in check here. Total current assets, $250 million versus total current liabilities of... Where's our total current liabilities? $82 million. So good. Total assets $413 versus total liabilities $85. So we can call it $300 million plus in the plus of liabilities versus assets. So that's good. Total equity of $328 million. Gross margin 83%. They're up to 83% gross margin versus 79%. They're spending a fortune on marketing, though. That's the one really... there's two ways of looking at it. One is they're getting more customers, more subscribers that can hopefully stay in the pipeline. But that's a lot of money to spend. Their total revenue is at $226 million. They spent $116 million on marketing. That's a crazy big number. My gosh. Operations and support was up about $10 million year over year, so they've added quite a bit there. But when you have that sort of revenue growth, you have to add to your operations, like just bottom line. Technology and development, a little over $12 million versus about $8 million. General and administrative was up substantially for the company as well. We can call it about $9 million roughly. So total operating expenses exploded for the company. That's $60 million plus in operating expenses were up there, folks. Whereas our gross profit was up, a little over 70 million, 73 million roughly year over year. So a lot of their increase in gross profit went down to operating expenses. So, and like I said, there's two ways of looking at it. If you're a super long-term investor, you might like that. If you're more kind of in the shorter term time frame, you're kind of looking and you're like, damn, man, we're still like almost spending everything we're bringing in here, right? By the way, thank you everybody that follows here. Thank you everybody that subscribed as well. Appreciate y'all. So the company ultimately lost money. They had a loss from operations of $8.5 million, which is kind of disappointing. You want to see HIMS flip to that profitability side. And that's why I'm kind of keeping an eye on HIMS, and maybe it's a move I make at some point in 2024 if they can flip this over to profitability. But ideally, especially in this sort of market with the time period we're in, you don't really want to see companies still losing money. So, but I'm pretty impressed overall with HIMS. It could be a move I make at some point in time. Not right now, but maybe at some point in time I make a move on HIMS. Maybe next year at some point in time. So I'm going to just add it to my possible buys watch list. Maybe I make a move on it next year at some point in time. The problem is my possible buys list is so freaking long now. And I try to keep it tidy, but it's just there's so many damn opportunities all over the place. Oh, by the way, you guys couldn't even see my possible buys list there because I pulled it up on the wrong thing, so sorry about that. But anyways, yeah, so they're still losing money. That's the bad thing with HIMS. They're spending a fortune on operating expenses. That's a bad thing with HIMS. Outside of that, overall, pretty good. Now, obviously, they did cut down their loss substantially in the last 9 months on a year-over-year basis. 9 months ago, the 9 months through 2022, they lost $54 million versus $24 million. So their losses have come down substantially, and that's also good news for them. But they are still losing money on that bottom line. So that is the bad thing with HIMS, right? Oh, making a nice move as of right now, 7%. So it's definitely made a nicer move up there. Yeah, so I know Dish had earnings, but did you guys see the stock price of Dish? Holy smokes, are they going to go bankrupt? What's going on? Oh my gosh, Dish Network was down 37%. Like I told you guys, though, why the hell would somebody sign up for satellite? In 2023, if you want a TV bundle, you go with Fubo or you go with YouTube TV, right? Or if you want to be weird, then go with Hulu. But ultimately, Fubo, YouTube TV, why the heck are you going to sign up for a satellite company? But my gosh, Dish Network 37% down today, folks. 37%. In Dish Network, they own Sling, so that's something to keep in mind, but I just don't think they're competing well. I think the only two companies I'm really impressed with how they're competing in the marketplace is YouTube TV and Fubo, and that's it. I don't think Sling's competing very well. I'll just be honest with you guys. Let's see what happened here. Oh my gosh. The CEO resigned of Dish Network. GAAP EPS of negative 26 cents, missed by 30 cents. Revenue was down nearly 10% year over year. They missed by $120 million. Net pay TV subscribers decreased 64,000 in the third quarter compared to a net increase of 30,000 a year ago quarter. The company closed the quarter with 8.84. That's a crazy thing. They still have over nearly 9 million paid subscribers. This is what's out there for companies like YouTube TV or companies like Fubo, right? This is what's out there for these companies to grab over time. A company like Dish Network still has nearly 9 million pay subscribers. And think about how many DirecTV still has in the old school cable networks. My gosh. There's a lot to be gained over this next 5 to 10 years. I can tell you that much in terms of subscribers, including 6.2 million Dish TV subscribers and 2.12 million Sling TV subscribers. The problem is they can't, even if they're gaining on Sling, they can't make it up versus how much they're losing in Dish. Retail wireless net subscribers decreased by approximately 225,000 in the third quarter compared to a net increase of 1,000 a year ago. The company closed the quarter with 7.5 million retail wireless subscribers. The firm also said Eric Carlson intends to resign as a president and chief executive officer November 12th. Yeah, after those numbers, you're going to have to resign, man. Got to call it quits. Carlson will remain on the board of directors through the closing of the previously announced merger with EchoStar. Interesting. What a mess. What a freaking mess. What a freaking mess. But, like I said, right? So the Dish side, the old satellite side of the business, still has nearly 7 million subscribers. My gosh, I just think about how many subscribers are out there to grab over this next 5 to 10 years. And I think about how many of those can Fubo grab? I know YouTube TV is going to grab a lot, but I'm thinking like how many can Fubo grab? Because there's a lot out there. And it's just a bigger and bigger number as people get rid of cable or get rid of satellite and say, I want to go streaming and get off these old school platforms. And Sling's not competing well in the market. I mean, the fact that Sling only has 2 million subscribers, or a little over 2 million, that's bad. When you think about the company that owns Sling has so many freaking subscribers, and obviously Dish Network's just bleeding subscribers from their old school satellite business year after year, quarter after quarter here recently. But when you think about they have all those emails, they have all those phone numbers, and they can't get those people to get Sling, that's not good. That's really, really bad. And the winners, the beneficiaries, are YouTube TV and Fubo, just to be quite honest. My gosh, what a mess. What an absolute mess. And now their mess is going to be even worse because now their CEO resigned. So now they're going to try to bring in another CEO, right? And who's going to really be attracted to a job like Dish Network? The company's a complete disaster. Like, do you really, if you're a really good quality CEO, do you really want to step in there for a $3 stock? Probably not. It's probably not worth it. In this industry, right? Probably not worth it. With the competition you got to face, probably not worth it. So I'm not even sure they'll be able to get that great of a CEO incoming at the company. What a mess, man. What a flippin' flapjacking mess. That's what I'll say about that. All right, folks. So here's what we're looking at. Tomorrow. Very interesting day. Uba de Booba before the bell. Celsius before the bell. Datadog, DR Horton. So we got a lot of earnings reports to look over tomorrow during the live stream. And then Rivian's going to be really interesting after the bell tomorrow. That one's usually a big mover. Upstart's usually a huge mover, so that one should be interesting. Dutch Bros reporting after the bell tomorrow. Axon is also reporting, and Toast is reporting after the bell. So tomorrow it's going to be a fun one, really fun one. I'm looking forward to tomorrow's live stream in a big way because we're going to have so many earnings to go over, plus that will live come out after the market closes. So appreciate everybody following. Thanks for being here, guys. I'm going to start preparing a main channel video now. Yeah, tomorrow should actually be a very interesting day in regards to what's going to transpire there. So much love as always, folks. Appreciate you joining me, chat. It was a little bit of a slow one here today, a little bit of a sleepy day, a little bit of a, we can call it the day of 2023, which has been big caps do okay, and then everything else is a little weaker beneath the surface. So much love, folks. Appreciate you, and see you on the main channel later today. Peace.